Coinbase announcing a landmark deal to acquire crypto options platform Deribit for $2.9 billion. This announcement comes amid a wave of M&A excitement unleashed since President Trump has taken office and appointed David Sachs as the White House crypto czar. Joining me now, we've got Peter Christiansen. He is Citi's fintech analyst. Peter, great to speak with you this morning. Talk to me about this deal from Coinbase and how you rate it. Do you think that this was the right move?
Absolutely, and thank you, Madison. Great to be here. I think part of Coinbase's mission is really to scale its liquidity. At the end of the day, it comes down to liquidity, because that's going to be able to draw in more capital and have the lower fees and certainly access points. And Deribit is clearly a pathway towards that competitive advantage. First, it gives them more of an international footprint. That's something that Coinbase has been working hard on delivering. And then additionally, it enhances their derivatives capabilities for sure. Yeah. On top of a 800 billion of futures volume, they now add potential of roughly $1 trillion in options volume on top of that. So it's really helped them on the institutional side.
And what does it signal to you more broadly about M&A specifically within digital currencies?
Yeah, it's been interesting. There's been a lot of activity, and we hear of things constantly. I think we're entering a new era for the crypto industry. It'll be really interesting to see if traditional finance and crypto native firms come together, and also just from the crypto native side, how these companies scale. I think there'll be a lot of competition, which I think will be good for the sector, but certainly a lot of opportunities. We do believe, and we've written extensively on this, that there will be a lot more public companies and crypto native public companies to come out. And in our dealings and speaking with a lot of them is they don't necessarily need the money. What they really do is crave legitimacy. And they believe that Coinbase has had a bit of an unfair advantage being a public company, having publicly disclosed financials and CEO and CFO attestation. So I think a lot of crypto native firms want to close that competitive gap versus Coinbase.
All right, and my guest host Peter has a question for you as well.
Yeah, when you're looking at investment possibilities, are you focused on companies that are going to be very focused on, say, Bitcoin or maybe into XRP, Ethereum, or do you go really for things that are playing farther down in the kind of alt token space?
There's a lot of questions on what token sphere. I think a lot of where Coinbase should be focused. At the end of the day, I really think it's about utility. And that's the promise of what blockchain offers. There's tons of real world examples where blockchain can make a meaningful difference in the underlying technology, given its immutability, trustlessness, and ability to scale. In fact, we often hear about the combination of blockchain and AI. And it's not necessarily what AI can do for blockchain, but what blockchain can do for AI, which is super interesting. But I really appreciate Coinbase's effort in going after utility, less so on the speculation side, creating real world applications that can be used not just for crypto tokens, but for all sorts of technology. One area they're doing that is B2B payments. That's an area that we're very interested in.
And as the U.S. government, as David Sachs and them seem to be kind of pushing towards some sort of crypto reserve or Bitcoin reserve, will Coinbase and these other companies benefit from that? How do you play that? Is that a great opportunity in the public space?
Yeah, Bitcoin is a major component of Coinbase's financial model. I think they have a reasonable share in on-chain Bitcoin activity. Clearly, they have exposure by supporting the majority of ETFs that are out there. So no, it's really important to their model. In fact, I think it was demonstrated this quarter more than any. Bitcoin has actually performed fairly well compared to other tokens, which have not, and still Coinbase produced some really meaningful results, and a lot of that was afforded by strong Bitcoin performance.
Yeah, and I want to turn to my guest host here on set with me, Peter Cheer, for this next question, because it's interesting. Senate Democrats on Thursday, they voted down that motion that would have allowed the taking up of that GOP-led cryptocurrency legislation, and there's some concern about whether or not that is going to be a blowback. But you rightfully point out that the powerful figures of the administration, President Trump himself, obviously are very pro-crypto. Do those sort of intermediate headlines matter in terms of how you talk to clients about their Bitcoin allocation?
I don't think so. Right now, I think Trump hasn't really taken a full bite at the apple to get this thing. You've got David Sachs there. You've got his own family very involved.
Yep.
Howard Lutnick's firm, Cantor Fitzgerald, which you had to step away from, they're very involved in the space. I think even Bessent talked about how the stable coins are huge buyers of T-bills. So I think this administration really views that ecosystem as important. So I think they're going to push through and find ways. And I would not bet against Trump finding a way to get something done. So I think the next thing is up. I think we can go above the $105,000 highs wherever we got on Bitcoin. I think it's the wrong step. I don't think the government should be messing around as much as they are, but it's not for me to say what they're doing. I'm here to figure out what they're trying to do. And I do think if they have that success, you will see a lot of the red states in particular follow through, and you'll see crypto kind of make its way into public finance much more. And I think that pushes it higher for now.